Hey guys, what's up? This is Andrew for TRENDLINES.com. So as you can see, I don't have a face cam for this video because I'm in Istanbul still. I have my flight tonight, guys, and I'm taking some time for you to make an update on GME because it's been a long time I didn't do it. And in Istanbul, even if I'm in a good hotel, the Wi-Fi is shit, guys. So I can't basically send my face cam videos to be edited. So anyways, I'm gonna be like this for this one. So let's analyze what happened on Gamestop last week and see what are the different scenarios for the coming week. Let's get into it. Alright guys, so as usual, I'm gonna start by reminding you what I was saying in my last video. So I was telling you that here we have some kind of a complex correction. I was here, using a triangle because I like to see triangles in those last corrective patterns. Actually, the triangle broke and we went to the 175 area, which for me is still okay because, I told you I measured the first wave, I checked the Fib retracement levels, and the 180 level, 79 level is for me the level below which I don't feel comfortable at all for a second wave. So for now, this scenario is still on the table. The 1-2 is still on the table because the second wave retracement is higher than 78.6. Usually it goes to 50 or 61.8. All right, those are the typical retracement level. But once again, let me remind you guys how it happened for AMC. All right, so I'm doing an AMC video as well. Here, for example, after the first wave, the breakout level we had, that is here, so basically I'm taking this one because this move really is what Gamestop is doing right now, guys. All right, look, Gamestop is just breaking out from the larger degree counting. All right, so when I take the two highs here and I connect them, I come up with the stuff. All right, guys, you can see, and here we broke the 100 and the 200 level roughly. We have retested it, we broke. I'm gonna come back to this very soon. That's not looking nice, I agree, but it's still fine for me. We broke the 200 level, and just to remind you guys that AMC after this first wave, even if the first wave was a bit shorter than the Gamestop first wave, let's measure this. So the first wave of AMC took 40%, the one of Gamestop, yeah, 100%. All right, so 130%. So you can see that the first wave of Gamestop is much stronger. So maybe we're gonna have an even stronger third wave. Let's see. But here we came back to the 78.6% retracement level as well before starting the third wave. So it is fine for me. What else I wanted to show you? I have here, because the question we all having is that, is this actually bearish or not? And to me, this is bullish, guys, because once again, I'm going to explain in this video why to me this correction is totally healthy. I told you guys, by the way, let me remind you what I was saying, a long time ago. I was here telling you all the way up that we're going to break 200, that this is looking very good, we're doing a beautiful 1 2 3 4 5, and then I was telling you that we're going to correct to the 220 area. Actually, we went even to the 200 level and we broke it. All right, so this stuff happens. Look, for example, what we had here. Okay, does it look familiar, guys? Does it look familiar? Okay, after some strong moves down, we like to have this kind of consolidations that just move sideways. This is what we're having here, and usually in this kind of stuff you have those bullish divergences, regular bullish divergence. So here you can see the MACD going higher, so the momentum is coming back and the market is making new lows. All right, so basically the bears can't take more ground here. I mean, they take more ground, but with the momentum shifting up. All right, so it's this divergence, the regular bullish divergence. The market is going lower, but with the momentum shifting back already. So it's usually a sign of a reversal. So the reversal doesn't need to come right away, guys. It can come after, 1 week, 2 weeks. Sometimes it takes time. How long have we been stuck here? It's been 1 month, guys. We're here 1 month. We are in this consolidation. So it might take maybe 1 or 2 more weeks. I don't know. To answer that question, what I like to do is try to label this using Elliott wave theory. And here, as you guys saw, I'm showing you guys this all the time, but for those who are watching my video for the first time, it's very interesting that you guys have a look at that double and triple three. So this is Elliott wave book. Okay, just type Elliott wave theory on Google, Frost and Prester, the writers, and you can see that the typical corrective patterns that move sideways are, you know, a flat, for example, a zigzag and a triangle, you know, a flat zigzag zigzag, you know, stuff like this. And this is exactly what we're having here. Zigzag, very sharp, then here zigzag, and here you can put a zigzag. Maybe it's going to be a triangle, you know. It's very hard to guess, so I can try to guess, guys, but to be honest, I have no clue what kind of corrective pattern we're going to have. Usually we're having triangles in the last waves. All right, so it's here. Although upon extremely rare occasions, a second wave in an impulse appears to take the form of a triangle. Triangles nearly always occur in position prior to the final actionary wave in the pattern of one larger degree. So whenever you see a triangle, guys, you know, if you're sure it's a triangle, then usually it means that this is the last corrective pattern of a larger degree wave counting. So that's why here I'm always spotting if I don't have a triangle. Here I don't see a triangle for now, but you know, you can always find some if you know, for example, A, B, C, D, E. It can be an expanding triangle, all right? But then here I'm missing a X. So if this happens, it would be actually here. And then the B wave would be here, C wave like this. Okay, but here, guys, I'm just doing some guessings, and you know, to me it's better to try to see what is the momentum doing and what kind who is in control. And here definitely we are in a bearish correction, but once again, when you cannot find something clean in your counting like I did here, guys, how clean is that for you? How clean is that? It's perfect. All right, when you find something that perfect, that clean, you know that the trend is up. All right, we're going higher. Here we're just correcting. So my scenario is not changing. I still believe we're gonna do a 345 and go to the 800 area. I don't know when, guys. I know it's been a long time I'm saying that, but this is what my tools are giving to me. So I think that this would eventually happen. Then I need to tell you that if we break the 170 level, what is here, then my 1-2 is less likely to happen. All right, this 1-2, because the second waves usually don't correct below the 78.6%. It can happen, of course, everything can happen. This is finance, this is trading, guys. This is only about probabilities, but usually it doesn't happen. So if it happens, very careful. And here I also have, you know, I like to use signals that actually come from different methods. And here, if I connect the lower level here with the lower level here, my two lows, I have a trend line which level is around the 170 area, so roughly the same area. So the 170 is the level below which, guys, I don't feel good. If we break 170, let me tell you what would happen, guys. The bears would definitely be in control, and they would probably push for the 135 level before pushing for the 110 level. So this is the bearish case, but once again, guys, this doesn't look like it at all, because we're having those bullish divergences here. All right, so basically this is very weak, and you know, we're making new lows but with the momentum shifting higher. All right, as you can see here, guys, this is the MACD, the blue line, and it's shifting higher. So yeah, to sum up the situation, guys, I'm still bullish above the 170 level. I feel very good. I'm just trying to label the corrective pattern that is happening. I see some regular bullish divergences, so it's telling me that the bears are weak, even if we are in a bearish corrective pattern. And I believe that, you know, the third wave might come maybe in 1 week, maybe this week, maybe next week. I don't know when, you know, let's be honest, but I believe it's gonna finally come. So let's be patient and let's see what is happening. That's it for me, guys. I hope you enjoyed this video, and if you did, please don't forget to click on the sub, like, and bell button so you're gonna be the first to know when I upload anything new. And stay close to shore. See you guys.